Welcome, 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 everybody. This is the Reverend Deacon Dr. Wilkerson. No, just joking. This is Peter and Travis back with our weekly recap, sharing our thoughts on the market. And what we are up to is the everyday man, two average individuals married with kids, trading the market, no hedge fund traders, just how do average, ordinary people, find a way to create financial freedom in the stock market. So everything we're sharing, of course, is for educational, informational purposes only. We're not giving investment advice. We are actually empowering you with education because we want you to be able to make your own decisions and not have to rely on some investment expert who tells you when the market is crashing, oh, it'll just come back. This is normal. And I always joke, look, if bending over and taking a loss is normal, I want a new normal. No, thank you. So we abandoned that normal. And, I'm proud to say that most of our members in 2018, when the market fell in price and closed actually lower for 2018, the majority of our members actually beat the market that year. So with that being said, let me go ahead and show you my screen here. Quick snapshot at my performance. I actually adjusted my spreadsheet a little bit. So let's say worst case scenario, I'm up 40%. Best case scenario, I would be up, I think it's 70 something percent. Let me add this in here real quick. Zero out. These are open trades I have. There's a very low likelihood that I'll lose money on them. A lot of them are profitable. So yeah, best case scenario, I would be up 70 something percent for the year. And Peter was like, oh, that's great. And I was explaining to him, well, I mean, if you think about it, it makes sense. Looking at the stock market here, from December 2018 to now, April 2019. Did I say December 2018? Let me make sure I get my dates right. To now, April. I keep wanting to be May. We're taking a vacation in May. Maybe that's why. To April 2019, it's gone up like 22%. Okay, so if you're a traditional buy and hold investor, you're kicking butt. You're probably like, we don't need Travis's program. We're doing great. Cool. More power to you. But options are leveraged. So if my account is up 40 or 70%, that kind of makes sense because, as an option trader, if I match the market's performance, I consider myself a failure. I should beat it. Not only that, I should beat it in a lower risk way. So like if I match the market's performance, case in point, I usually can match the market's performance risking, maybe 5% of my total account. So if I have $10,000 account, I only invest about 500 of it, right? And then just keep rolling that over, compounding my profits. And I generally can beat or meet the market's average that year. And people are like, how do you meet the market's average by keeping 90% of your money in cash? I'm like, yeah, exactly. Options are awesome. But this year I have a lot of my money out, fully leveraged. I'm teaching a concept called stock market insurance, where I'm showing people you don't have to fear market crashes. You can insure your accounts against a loss. And I've showed several examples. So that's why my account is up higher this year, because I have more money out in the market, but I have it protected. So my thoughts on the market is going to fall soon. People don't like hearing that. I got an email from this guy, take me off your list. You're using scare tactics. I'm like, no, I'm just talking facts. The market will fall soon. Everybody knows that. We just don't know when. And notice I didn't say when, but we all know it's going to fall. So I'd rather focus on facts, not fear. Fear is useful sometimes. But let's focus on facts. It can't keep, this party has to eventually end. And I'm going to keep saying that because I want people conscious of this fact. And I don't want you to get caught in the pullback like last in 2018. I don't want any of my members getting caught by a 20% correction and are surprised by it, just completely oblivious. No, I want you always conscious of the fear, the risk of investing in the stock market. Take the take the easy money now, but never get lazy, always stay on your toes, anyway, I'm rambling on. So with that, let me pull up an Apple example. I'll just share this. I did place a trade on Facebook. I told everybody I would place a trade on, I think one of our recaps, I said I was going to place a trade right after we met. It was on Facebook, and that's actually profitable so far. And if you look on my spreadsheet I share with Success Academy members, every time I find a stock, I put it on this spreadsheet. Every trade I make, they look over my shoulder as I'm trading. this 5-year retirement plan, showing them how we created financial independence in 5 years. They get to peek over my shoulder as I'm recreating this. This is version 3. Version 1 was when my wife and I did it. No one saw us. Version 2, I did it behind the scenes for my members. Now in version 3, I'm doing it publicly. I'm putting the videos on YouTube. Everybody knows about it, and I feel like I'm talking too much. So let me do one last thing, and then I will turn it over to Peter. All right, this is the 10X strategy. This is a summary of the 10X strategy. I decided to show members. It's recreation of how when I first started, I took a 10 grand account and it grew to like, I don't know, about 70 grand in a couple of months. Now, it's never been something I could teach because it was part luck. It wasn't even skill. I was a new trader. So it was like being in the right place at the right time. But I never forgot the lesson of the growth I saw. Like, wow, this is truly possible. And so I've always been working that. Let me find a way I can teach it so that other people can duplicate what I do. And this year I decided to start teaching it. So here's just a short summary of it. Pretty much you're just compounding profits. You're compounding 2 different strategies I taught. Taught a couple of years ago to Success Academy members called risk-free trading. And we were talking about before we hit record is where if I get in a trade for 100 and then it doubles, it turns into a $200 profit, I get out and then I get back in with my profit only. And then I consider it pretty much a risk-free trade because I've protected my original $100 investment now. So now I'm combining another strategy called compounding profits. So if it's a $200 profit, I know I'm throwing a lot of numbers. I'll maybe put something on the screen. Not only do I cash out, but I get back in with my original investment. So I may reinvest 300, not just, my profit. So here's an example here on Apple. I was showing Peter and I was like, I thought it was more sexy to this. He was like, "Oh, Travis, you tripled your money." Oh, yeah. Well, I forgot what you said. You said something smart at ASS. You had a smart
I'll
ASS
tell you guys
comment.
afterwards because I'll tell you what he said and then I'll tell you what I said. You guys will say the same thing. Anyway.
All right. I bought what's this called? A non-directional strategy, total speculative. Hence why I bought a non-directional trade is where I thought Apple was going up. So I buy my primary position, but then I insure it. I bought insurance for it. And these were risky trades. Short term, I have this highlighted here because you can see it. I opened this on January 3rd. That option expired January 18th. So this is like weekly options. Again, total speculative gamble trade. I just wanted to see. I threw a little money just to see, but I bought some insurance a little further out. In total, I risked $1,100. So worst case, if I lost on both of them, I would have been out $1,100. But it wound up working out. The call at least did. It went up to 945. I sold it here. And these numbers here is I have this added up. So if you factor in my original call investment, original put plus my profit, I'm still down 200. So you can look at it one way. Wow, he's reduced his risk from 1,100 to 200 just by doing non-directional. Because again, it was still insured, right? You don't see me closing out the insurance. I still had the insurance. So at this point, I reduced my risk to 200. However, my next call option would happen. It went up again. Here I bought, where is it at? Oh, I sold here 111. Oh, I have it spaced out. I don't know why, but on the same day, I reinvested those profits, 900. I got back in with a 160 call here, and I bought a put here, and that's earnings insurance. All right. So is that making sense so far, Peter?
Yeah. Why did you buy another put though?
Earnings insurance. I double insurance. I'm paranoid because
Okay.
I still had the
'Cause you
original
already
put,
had
but
right. Okay. Because so now you have 4 puts.
yeah, now I have
Okay.
4 puts, so
Okay.
it's double insurance. Because another thing, double insurance, and if you look at my profits, the call had some profit. So I was like, well, I'm going to use some of my call profit to buy even more insurance, right? Because I don't know what Apple's going to do. And here it wound up on 2-1. I sold the 160 call to 875. So that's, I don't know what percent return. You can add that up later. But in total, I cashed out 1,700. Now I have this added up here. So you can see my 200 I was down. I bought another call, puts. You factor in all that profit. I think that's right. It's about $800. So now I'm in profitable territory, right? And then I just rinsed and repeated. Kept rolling that up, reinvested the profits here. As of now, and as of this recording, My 200 call is at 2150. That's his current price. I have 2 contracts. So in total, I have $4,300 tied up in Apple. So what you can do is take 4,300 and you subtract it from my original investment of 1196, and you can see that in about 3 months I have a $3,000 profit off of. You take your profit or loss, you divide it by original investment, and that's how you get to your percent return. So it's a 259% return. Why are you laughing?
Because this
Because
is
I
where, so Travis is doing all this before we start recording. He's like, it's not as sexy as I thought it was going to be. I thought it was going to be like 1,000% return or something. I'm like, 259% is not sexy. In how long? 3 months? Oh yeah, that's not only 88% return. So, my goal is to get 1 to 2% a month, and Travis's goal is to get apparently 400 a month, because he's kind of upset because he was only getting 88% return a month. So that's what we were laughing at.
yes, I'm jaded. I've been doing this a long time, so I'm completely jaded. Yeah, I was like, yeah, no one's gonna feel sorry for me. um, and you're really not going to feel sorry for me is you see this mysterious number down here, 3597. I'm not going to make this an example. Success Academy members know what it is. I pay for my calls with other strategies. So I finance the purchase of my call with another strategy. And I think those who've been with me a while know what strategy it is. So in addition to the 3,000 I've made on the call, I actually have more profit than Apple. And that's part of the 10X strategy. So, so you can look at it as 1,100 grew to 6 or 7,000, and the goal is to 10x it. I don't know if I'll ever get there. It's just a goal, but that's my free tip for the day. And with that, let me turn it over to Peter.
So, and one of the things I'm going to do too, starting next week, so I'll apologize right now. I don't know why I don't do the same. I have a spreadsheet, but me and Travis were talking about this. So I do have a spreadsheet. I don't know what I did to my thing here. I do have a spreadsheet that keeps track of my trades, but I place mine in only my real money accounts. And sorry, you guys, I don't want to show you my real money accounts. No different than you probably don't want to show me your real money accounts. So, and it's not anyone's business. It's none of my business what you have for money. It's none of your business what I have for money. And that's not the point of these. The point of these is to show you that, one, when Travis and I first started this, it was just to keep everyone engaged. And I think it was really to keep me engaged more than anyone else, because I'm a scatterbrain. I'm that squirrel that chases the bright, shiny object. And so, but unlike Travis will point to himself like he was just doing, but he's not nearly as bad as I am, because he's taken advantage of this 23%. And I really haven't. I've made money, but I haven't made anything compared to what I had the potential of making based on my accounts. But so just keep that in mind, so I know Travis and I always talk about it. There's going to be someone that wants to post something that says, hey, you're not being transparent and all this and that. And it's like, okay, well then if you don't think we're being transparent, go to another YouTube channel. I really don't have time for it because we are being transparent. We're very transparent. You can ask anyone that's a member of our Success Academy. But if you're not getting what we're putting out, we're not here to show you how much money we make. We're here to show you how you can do the exact same thing, because there's nothing special about Travis and I. We don't have PhDs, even though he did call himself a doctor earlier. We don't have those. I don't even have a degree from college. My wife is smarter than I am. So, because she did get her degree in college, but that's not the point. The point is that it doesn't take, it takes discipline. It doesn't take brains. Discipline, because you know what, my brother tells me I'm the smartest out of the family, but I have not been disciplined compared to what Travis has done. He's been very disciplined. And so that's the point of these videos, is to help you guys be disciplined as well. So,
Yeah.
So with that, I'm just going to cover my stuff real quick, because I can't show you in a spreadsheet, which I'll change and make sure. I started these with a spreadsheet, and then I'm a squirrel, so I got away from it. But right now I have a lot of trades in SPY. So I have cash secured puts on SPY. They're long-term cash secured puts that we use called the Buffett strategy. Those are nearing an 80% profit because the credit I received on it, I'm going to hit about an 80% profit. And it just doesn't make sense for me to let those, they still have like close to 300 days left, so almost a year. And it doesn't make sense to let them sit out there for an additional, like, based on what it is, it's like an additional couple $100. So I'll buy those back if the market keeps trending up the way it's doing. Even if it kind of goes a little flat, those things are going to get to an 80% profit pretty soon. So I'll buy those back and I'll just rinse and repeat that strategy. So SPY down day today, but everything is telling me, yeah, we keep talking about it. This 293 is probably going to be a resistance point for SPY because usually highs are a resistance point at some point, and it's getting there. It's about $10 away, which in a month or two, if it keeps on its pace, it's going to be there, maybe quicker, but something you got to keep in mind. So I'm keeping it in mind. But right now, SPY isn't telling me it's going to crash anytime soon. So I'm just going to trade what I see. So that's what I'll do with my SPY trades. I also have some call options that I bought with the money I generated from my cash secured puts. So once those hit profitable territory, I have a certain profit range, and I'll cover that when they get to it. Macys, we've covered Macys a lot. Well, Macys, interestingly enough, you can see it's gone up, but let me bring up Market Club real quick here because it's triggered a weekly green. Now, we still have a red monthly on Macys, but if everyone knows, I own Macys and I got caught buying it way up here. So I do want to unload it, but now that I got a green weekly here, I have a covered call on Macys at $24. I'm probably going to buy that back for a small loss because the potential to limit my loss from when I was assigned is pretty good now because I got a green weekly. And I'll definitely not do anything with Macys if Market Club triggers a green monthly, because if Market Club triggers a green monthly, I'll just wait for Macys to run up, and when it triggers probably a green or a red monthly, then I'll dump my shares, but I might get lucky here. So that's where I'm at with Macys. I have an Apple trade as well. I have a couple. I have two calls that I bought, and they're actually pretty profitable. They're not even in the money yet. I have two $200 call options on Apple. They have a lot of time left, 71 days. They really have 101 days, but based on our 30-day target, we get out at 30 days no matter what. So it's got 71 days, and they're already profitable. So that's good. And Apple's not looking like it's going to slow down anytime soon. And then there's my SPY. AT&T, I'm renting out my shares. If we look at AT&T, it's dropped back down below my price point. I bought AT&T at 32. My covered calls are at 32 and 33. If AT&T had continued this up, or if it does start to go up, I probably won't let those. I most likely won't let those get called away. I'll probably buy those covered calls back. Well, one of them anyway, because it's got 51 days left. So I'll buy that back for a loss so I don't get called away, because I want to keep my AT&T shares. But another good point today was dividend day for AT&T, and that's a pretty good payday for us on our accounts for AT&T. So that's what I love about AT&T. And then I am in a Facebook trade as well. Mine's not as profitable. I just did my Facebook trade. It's a vertical credit spread. But looking at what Facebook's at now, I think I'm at the 175, 176. I can't remember what my spread is, but I looked at it this morning and it was profitable. So once that hits an 80%, I'll get out of it as well. But it's got a lot of time left. So that's it. I will put everything on a spreadsheet so you guys get a better visual representation. I don't have to show you the exact numbers, so to speak. And then the other thing I am going to start doing is trading similarly. I'll place the same trades in a paper platform. They won't be the exact same dollar figures as my real account, but then you can at least see that, I'll do like Travis does. Because I know someone had mentioned that in the YouTube site, about transparency. And for those of you guys that don't know, every trade Travis shows you that you see on his paper account is already placed on his real account. He doesn't waste time by, if it's good enough to trade on paper, it's good enough to trade in his real money account, and that's how he does it. He just mirrors it on a paper because there's no reason for you to see his real account. So, and by the way, most of you guys would be kicking yourself if you saw his real account, I'm sure, because he's a lot younger than us. No, but it is something that I will do so you guys get a better. I think in the beginning, and I used to get a lot of the Success Academy members loved my spreadsheet because it had all the different colors kind of laid it out.
Yeah.
But that I'll just end with that. The reason you don't see that is because I lost my discipline in how I was doing that. My discipline was to say, okay, I want to target a potential profit each week, and each month it would lead into my longer term goals, right? So it would give me my potential profit for the month that I'm targeting, which leads to my annual profit, right? So it kept me on track. I kind of got away from that, and Travis and I were talking about that. So I'm getting back on board, because nothing's worse than when you look at your mentor and you're not following him. For what reason I wasn't following him? I mean, if you look at this market, it's gone through the roof, and I didn't lose any money. I did make some money, but I didn't nearly capitalize on what I could have. If I had followed your strategy, I would have been done for the year to meet my outrageous ROI that I want for my account. I would have been done.
That sounds Are you saying that sarcastically?
No. If I had followed your lead, so remember I showed you this, and I never shared this with anyone. I create 3 different goals. I create a typical return on investment goal or target I'm going to get, and then there's one in the middle of the road, which is a little bit more aggressive but probably attainable, and then there's one that most people would be like, you're not going to get that. It's like generating 7% a month or something, and you're not going to get that. Had I been disciplined, I would have already attained it in April. My outrageous goal.
Yeah.
So
take the rest of the year off.
Yeah, I could have taken it, and probably I wouldn't have done that, but I would have definitely scaled back how much I traded, so I didn't eat into those profits. But still, it just goes to show you the power of discipline, and the power of no discipline. So that's it.
Well,
I'm going to end on that.
Yeah, I don't have anything to add to that. Everybody can chew on that for a while and meditate on that and see how that applies in your own life. And then maybe the next recap, we can give you some strategies to how we overcome or work through our lack of discipline. Because, you can't see it in the camera, but my little belly right here is showing a tremendous lack of discipline. So I may look like a great trader, but trust me, I am not disciplined in other areas. So,
but we've been both getting disciplined on that. Right?
We have. We've worked out consistently, for about 8 days now, I think?
Yeah. Last week was my first week I didn't miss anything. So I'm not as disciplined as I need to be. My wife goes religiously every day, Monday through Saturday. She goes on Saturday. And she's been my inspiration, and I guess that kind of transpired to Travis, because he's I heard your wife talking about working out, so I went to the gym. So him and I have been texting each other. Hey, Travis will text me, hey, how's your trading going? How'd your workout go? So it's been great. So
get some. Yeah. Again, tell her I said thanks for the inspiration.
I will.
I need it. All right. But you take care, and everybody will see you next week in next week's recap. If you have any questions, we'll start doing Q&A. We can slip in 1 or 2 questions from the audience. You'll have questions you want us to cover. Either we'll answer it here on the recap, or we'll just tell you what training, where that's answered in one of our trainings we create. So with that, hey, you all take care, and we'll see you next week. All right. Bye-bye.
See ya.